Traders, how you doing? Tom Willard Trading. Welcome to another video. It is Sunday, June 7th, and I wanted to do this video update to kind of fill you in on what I'm looking at trading here. I've done my scans, and it's interesting times. First, I want to do a lesson here on the QQQ. This is the NASDAQ ETF that you'll see here on the weekly chart. Again, if you've first time to my video or my videos, the way I have these four charts set up is it's all the same issue. So in this particular case, you'll see it's the QQQ. That is the symbol. You got the weekly chart in the upper right hand quadrant. Upper left is the daily chart. So weekly chart, daily chart, 60-minute chart on the lower left, and on the lower right we got the 15-minute chart. Okay. Primarily, I talk about swing trading, holding for multiple days, as that's more conducive to most people's situations. If you're a day trader like I am, I will do some coverage on some things and some thoughts there too. But interesting here, so the QQQ, you'll see here, this is when the bottom fell out and it completely collapsed with the COVID-19 epidemic. And since this bottom was put in here, as near the 200-day moving average on the weekly chart, we've come all the way back up and actually just made a new high. So the question becomes, well, so what do I do now? And I'll say this is just a general rule. If your timeline, if you're a day trader, you can still go long. You can still go short. You trade whatever's hot or not on a given day. I've been doing really well just going long and short depending on the issue I wanted to trade for a particular day. You can trade on a little smaller time frames when you're day trading. Obviously the 1s, the 2 minutes, the 3 minutes, the 5 minutes, the 15 minutes, the 10-minute charts. Okay, but for intents and purposes of this video, we're going to talk more long term. So if you are a buy and hold type of person, an investor, a long-term investor, at this point, I would say it's not time to be buying new issues here. Okay, the time to buy it was down in this area. Now, obviously, you're rarely going to be able to call a bottom without a crystal ball. Okay, but you can hope to. And I actually talked to a lot of people that have gotten in this area, including myself, on a lot of issues, and have been able to ride that up. I actually sold into this move up. You'll see here on the daily chart. Let me draw this out too, because I'm going to talk about it from a short perspective, shorting as in like selling stock short, and a long perspective. And I think this will be a good lesson for people to kind of take. It's really about your mental approach and how you frame things. But as this came down here cataclysmically and lots of gaps, you can see lots of really wide range days, very, very bearish sentiment. Most people that I was talking to didn't anticipate what happened, including myself. I didn't anticipate for us to pretty much go up all the way back up and make a new high, literally within what, 1, 2, 3 months of things falling apart there in mid-March around St. Patrick's Day. So what happens here is if your bias is that, hey, we're going lower, this is a short, even though this is a pretty massive move. Typically there's a couple of failed opportunities to go short, and then eventually right in this area here, you've got, and this is when I sold out of my long. So I bought long in this area here, a number of different issues, not QQQ particularly, but in general, Google, Microsoft, Facebook, few of these issues, but I'm out of them now. I'm no longer long in them. I sold them out here because my technical analysis would tell me that, okay, we're coming up to a point where it's probably going to go back down. And so I took my profits in this area. I got trailed out. You'll see here, if you were long off this low, you'll see this was probably a pretty scary day here. Right after this move down, you get this big gap down here on this day. Let me see if I can just back the chart up because it makes it a little bit more realistic and visceral when you can see what happens. Okay, so if you're long and you're in here, and then all of a sudden this day happens here where it goes down, that's scary. Okay, now I held through that because I was shooting for more of a higher retracement here on the daily chart, and sure enough, it came back up. But when it started to get here, where you see this particular cluster of resistance here, okay, this is when I started taking profits on my longs I bought in this area. Okay, prudent, in my opinion. Now, have I missed out the rest of this move? Absolutely, and I haven't found a way to get back on. Now, let's talk about it now from a continue talking about it from the long perspective. So where could we have gotten long on this? Well, if you had indicated that you, in your mind, that this is going to go back up and retest these highs, and you had that bias, you can see that there's opportunities where you can see this gap support here where it came down, tested that gap. It created some support levels here. When it got up, it came right back down to that area, right, and held it. Here we went up. It retraced. There's a minor support level here. It actually broke through that, but you see right here on the entry off this green candle, if you bought this gap up, you would have been slightly underwater that day. That's actually a buying opportunity right there. Okay, goes up here, red bar, comes back down. Look at this bottoming tail right around gap support. So you'll see the gap support, and I was also riding along the 20-period moving average here. So what now? Well, if you feel so compelled to buy something new right now and hold it overnight, which I do not, okay, you can still trade it. If you think this thing's going higher, which it could, you could use pivots as your stops. Like this pivot here could be your stop if you entered on Friday as a long. You could use this pivot here, which is giving up more space. So let's for example, let me just ask you a question hypothetically, and obviously this is a video, so you can't answer me. But if you bought this here, say 240, all right, and you put your stop here at the bottom of this tail, which is about 224. That's a $16 stop. You're going to risk $16. Now, with your typical reward to risk ratio of 3-to-1, you need this thing to go another $48, so about $288 a share for it to be worthwhile. What do you think is more likely to happen? That this will come down and take out this 224 area, or go up to 288 after this extended run? For me, and again, I can't speak for you, to me it's a higher odds that this will come back down and take this out before it goes up to 288. Now, what it could do is hit here between 230 and 240 for a couple months, and then break out and hit to 288. But at that time, if this thing consolidates up here and cannot go lower, that's telling me that I need to change my approach if I'm short, okay? Or if I'm long, I'm buying even more when it breaks out of that consolidation. Does that make sense? So with time, things change, okay? You can definitely, if you were in here, that's where my stop would be. And I didn't take this, I'm telling you right now, I did not take this trade because I don't think this is likely that this, I think this will come down to 224 before it goes up and makes me 3 times that risk, which is a 288, okay? And here's the weekly chart here. I doubt that'll happen. Could it? Absolutely. That's why you have to have stops and you have to have targets. Okay, it could go to 300, it could go to 400, who knows, right? Anything can happen. So you've got to have rules and you've got to follow them. Now, with regards to the Spies, you'll see it's a little bit different. I'm just going to leave this actually set up here like this. Okay, so here's the SPY, and here again, the weekly chart's here. It's kind of partially hidden by this daily chart. And you'll see again, multiple options to go short and get stopped out. If you got short here, you got stopped out here. If you got short here, stopped out here. Short here, stopped out here. Short here, stopped out here. Short here, oh good. Short here, boom, stopped out here. Right? Short here, stopped out right away again. Now really no short opportunities at this point. These last days have been kind of little island candles moving up here to pass this resistance point and approaching the highs, which you'll notice now the QQQ I just showed you just made new highs. The spiders, the S&P 500 ETF, this SPY has not. It still has a little bit of a way to go. Nonetheless, it's extended, okay? It's extended. You got to pivot on the weekly way down here, which I think corresponds to this spot right here. So the question is, if you're buying now, where are you going to put your protective stop loss? Okay, you can say, well, I'll just use the candle that got me in. Great, well, that's fine, and you can keep it to that. The market could gap down way out of your favor. It could gap up way in your favor. That's not a game I typically play. So that's why I day trade from time to time, and then on swing. Actually, honestly, my day trades and my swing trades are all taken based on technical analysis. Okay. There's some fundamental stuff that goes into some of the swing trades because it's longer term, and I'm looking at some of those more critical fundamental factors. But that tied with technical analysis is killer when it comes to trading, swing trading, and longer term investing. Day trading, it's all about the charts, baby. It doesn't matter if the company doesn't make money, if it's hot or not a day, if the volume's coming in, the resistance points are there, the support points are there, the patterns are setting up, I'm taking it. I don't really care what the company does. I just want to make sure it's got enough volume so that I can get in and out like a ninja. No one knows I was there, okay? It cannot be something that's trading thin where you can get taken advantage of. More likely with market makers, you got something that's doing a ton of volume. My 1,000 to 5,000 to 6,000 shares that I'm trading goes unnoticed. No one cares. Okay, that's what you want to be. You want to be in a very liquid issue so that you can get in and out, do your thing, make your money, and move on. So getting back to where do we go from here? So I urge you, this is what I'm doing. Let me just tell you what I'm doing. I'm not buying anything swing trade long at this point with regards to the major market indices, spiders. I mean, we could look at a number of different names. In fact, I'm going to go through my long list, the stuff I'm looking to buy long, and then the stuff I'm looking to short actually right now. Because right now I think with this volume pop here and this island day up in this area, also taking out this resistance point, I think this is a better short opportunity now than a long opportunity. Let me repeat that. I think this is a better short opportunity now than a long opportunity. Okay, I think you've got a pivot here. It may loiter here, and of course the longer it hangs out in this area, if it does without going lower. For example, this area here, notice how it came up here and it tried to go lower, it tried to go lower, it tried one more time to go lower, and actually made a new low, giving hope to the shorts, only to sit there and turn around and smack them right here. Okay, so many lessons in this actually. Look what happens if you got short here and you didn't take your stop. Right? Say you got short here, thinking, okay, we're going back down. Oh no, this is crap. It's going to go down. I'm just going to hold on. I'm going to short more. Okay, I'm just going to short more. I know this is going to go. Oh yeah, it's definitely going to go down now. Let's load up the boat, baby. Now what happened to you? Right? You go, man, I wish I would have taken that original stop. Take your original stops. You can always get back in. Hell, commissions are hardly anything nowadays, right? They're so inexpensive, if anything. Okay? Get out. You can always get back in. Just stay on point, stay on the game, be with the market every day. You can get in the next day. Okay. Right now, though, leaning short in general on some of these stocks that are extended like this. And I'll talk about a few of my top ideas that I'm going to be looking to play this week and the next week. Okay. So let's get to that. All right. So let's talk about gold stocks first. Newmont here has had a very strong move off this in March, right? March, April, May. Here's March, April right here. You can see May here. Beautiful move up. It is now pulled back. In fact, on the daily chart, it's almost looking like a head and shoulders, which it very well could be, and it broke the neckline here. So the question becomes, does this go lower? Now, I think this thing has a lot of, here's you got a rising 20-period moving average that it kissed off of on Friday, okay? And I actually bought into this on Friday near the lows because my support area, my actual buy point was 50, but I saw this coming down here. I thought, damn, this is a buying opportunity, so I'm going to buy it. So I bought this at 50. If it comes down to this 50 area, I think it's got some good support in this area. I'd be buying more. Where's my stop going to be? Well, typically, I put it the next pivot back. So we're looking at about $45 a share. Now, again, I don't disclose exactly where I put my stops. I have my own method that I've developed over the years, but it's in this 44 to 46 area, right? 43 to 46 area. You got a flat rising 200-period moving average here on the daily. You've got the rising 20-period moving average on the weekly chart. On these time frames, this looks good as a buy. Okay, and I bought into this on Friday, looking to add to my position. Obviously, if it breaks above 55, you've got a hard stop here at this bottoming tail, which is 53, I think, and change, 52.33. Okay, so you've got to stop there if you want. But Newmont, to me, I did buy into this on Friday, and I'm looking to add to the position. And I'm looking, again, my initial target will be a move back up to these highs around $65, $66 a share. So if you look at that, if you get in here 54 even, you're looking at, what, a $12 target? And the stop is about, you know, $52.33, $52 a share. It's about $1.50, right? $2, maybe with a little cushion. So the reward to risk is there, okay? But if it hits that stop, if that's your stop, you got to take it. Now, if you're buying smaller shares, okay, like a nibble in, and you're looking to add if it comes back down here at 50, and you're using a stop down here at 44, well, then you got to make sure that you know, if you got a $44 stop, that's $10 off this, and a $12, $13 target, okay? So what I'll typically do is nibble in smaller shares and looking to pick up and lower down my average cost with a harder stop here, knowing that this could come down a little bit more, give me a better price. But when it goes down to 43, 44, if I'm still in this, I'm out. Now there could be some news that comes out. This could go up to 58, and then it turns around. Then I move my stop up and get out at 53. So the stops can be dynamic, but you have to have a line of sight where, hey, it is not going lower than this. You can always move up a stop as things start moving in your favor, but you should not ever move a stop lower. You should know getting into it where my line in the sand is like, no matter what, come hell or high water, if this price hits, I am getting out of Dodge. Otherwise, you'll see what happened to the spiders when I talked about the people getting short, and if they didn't take their stops, how they'd be getting crushed right now on this really nice rally off to the tops, to these new highs, or to the new highs in the Qs, and to near the highs in the Spies. So a few more ideas here. I won't get into too much detail. I'll just show you the charts. GDX in an uptrend. Okay, another possible head and shoulders if it breaks the headline or the neckline here, but support here at 30. Support here on the weekly chart. Pretty solid support here at 30, right? I'm sorry, here at 30. And actually at 32 from this here. So it kind of kissed off this 32 here. It's got support here on the daily at $30 a share. And below that, your next support area is way down here at 23. So if you get in this, toy with it here. If it breaks this 28.50, 29 area, I just get out. Okay, it could come down, take out that area, turn right around, go back up. Well, then you can get back in. Otherwise, if it breaks through that, it's got a nice void where it can move easily down to $23 a share, way down here. Okay, 24, and that's a flat 200-period moving average. So if you get in, typically my stop would be in that same area. Let's look at the GLD. GLD here, you see holding up a little bit better. It came up, it's kind of a really sloppy wide base here between 156 and about 160. Good Lord, what is that up there? 160, 164, 165. So it's about a $9 spread here between the top of this range and the bottom of this range. And it's just kind of toiling along here. But you can see here, this bottoming tail, as it took out some support areas here, right, and tested this support area here. So I think this is a buying opportunity in this area with a stop slightly below these areas. Because really, if it breaks this through 157, 156, it's got a little bit of support here at 155, and then the next support layer is down here at about 150. Okay, so typically if it breaks that, I'll just get out. If it comes down to 150, I'll revisit it, get in again if the conditions look good. Or if it takes me out, turns right around, starts to go up, then I'll look to get in and establish that new pivot as a stop. Wheaton Precious Metals, another great one of mine. This one I sold, actually, I still own small shares, about 20% of my original position. I sold into the strength up here. Took a lot of really nice, massive profits, and looking to buy back in some of that position. Now that I'm only down to a 20% position, I'll probably start buying in. You'll see here it actually kissed on support, so I'm interested to see what this does on Monday, tomorrow. If it can get up above this, then you've got a nice line in the sand here around $36 a share for a stop. You'll see it's a pretty nice move down, pretty sharp after this move up. So we'll see if there's support here. Next support area, you can see a cluster of bars here at 34, and then 30 would be your next support area below that. And if you look to the left here on the weekly chart, 32, you can see there's some support between 32 and 34, and then a lot more support here in the $28 to $30 range. Okay, let's talk about Microsoft. Now, I don't own this one now, but I did buy it. I was fortunate. I found the bottom here around 135, 140. I owned it, and like I said, I rode it up, and was out more in this 170 area here when they had this day down here, and I thought, okay, we're going to get a bigger leg down. I was wrong, but I had my profit taking plan, and I followed it. Now, would I be another $17 a share higher in this thing if I had some? Yeah. But again, I don't have a crystal ball, just like anybody else. I got to follow my plan. Now, we've got a base setting up here. We've got a couple of we got a higher pivot here. We've got higher pivots here. Okay, we've got a rising moving average. We got a rising 200. We're here. We're at near highs. This is a cup and handle forming. Volume is a little bit lower, right? This is setting up to be a buy above these highs around 188 to 190 a share with a stop around 175 to 170 to 175. Okay, watching this as an opportunity to buy in. Now, with regards to the market being so up, and with that high volume Friday off that jobs report where we got topping tails left and right and overextension, if this, I'm going to listen to me carefully. If this breaks out in the next few days, I will not be buying it. Okay, because I think things are overextended in general in the general markets, and I think any breakout right now with this thing it could be trouble. But if the market toils, it can't go higher, can't go lower, goes up and down, whips around a little bit, but stays in this general vicinity, and this one can base, and the volume stays low, then maybe next week, if it breaks out, I'll be all over it, okay? So it's setting up nicely. Watch it. But if this thing breaks out with force, Monday, I'm probably not going to buy it. If the market gaps up, say the market we come back from the weekend and tomorrow we wake up and it's gapping up just like 2%, like it was on Friday, would I be buying in? No. I was like, you know what? This could be another. In fact, I would be leaning more short as a day trader. Okay, swing trading, you pretty much at this point when you're this extended up, let me go back to the Qs here real quick, and you're shorting, you really don't have anything to bank off of other than the most previous bar. Okay, and a lot of times what happens is these things, as you see, they just kind of just keep grinding up and grinding up and grinding up and just killing the shorts. But I think Friday was a capitulation day for a lot of the shorts. I think a lot of them got drained. There are some issues where people got killed. I'm going to talk about that in my short ideas here shortly. And I think we're right now ripe for a pullback. Do I think we go down to these lows? I doubt it seriously. Do I think we can retrace 30% of this move that we've recently had here from 170 to 240? Absolutely. I think we would pull back to 220, 210, and then maybe set up to go higher. Okay, but I think a pullback is in order, and if you don't want to live through that pain, like I said, when it pulls back to 220, 210, if it does, then we'll be talking. I'll put videos together. We'll be talking about initiating new swing positions there. But right now, if you've been riding this, I would suggest taking some profits off the table. Not all of them, but take some profits off. okay, because I think that you're going to get better prices here soon. All right, first up, RCL, Royal Caribbean Cruises. Here's the daily chart. I expanded it. You can see here that in my previous video, I talked about how I wanted to short this thing if it could break above these pivots with any sort of force. Okay, and you can see it did here, and it just kind of wandered along. And then, of course, we had Friday come along where it gapped up large, put in a cataclysmic move up here. And in fact, right here was a climactic shorting setup, which I actually played. I tweeted about this on Friday. It was a very nice, profitable trade for me. And it topping tailed out. And you'll notice if we look to the left on the daily chart, we got some resistance right here around 80. Okay, I like this as a swing short. We were here, the declining 20-period moving average, we just breached it. Look at the volume spike. Okay, that's people selling out or covering in a lot of cases, right? A lot of buying and obviously a lot of selling. You can't have a buy without a sell, right? Every stock there's a transaction on both sides. Okay, so we've got a nice big move up, gap up, exhaustion type volume, topping tail, resistance to the left. This is a top short idea, in my opinion. I would love to see on Monday this thing gap up yet again, maybe to near the top of this topping tail, and then I'll look to start legging in short with a stop above this resistance area here if it breaks above. I think this thing could go higher. Technically, it's got a clear path to move all the way up to 110, and it could. Anything can happen. Plus, you've got the lid of the 200-period moving average declining around $90 a share. That may be more of a resistance point, even though technically, from a candlestick perspective, there's not as much resistance as there is here. So my line in the sand is I'm not going to short it at 69 or 68 with a stop up here at 80, 81, 82. What I'd like to see is one more push on volume to try to break past this. I would love it if we were very bullish and we gapped up yet again on Monday, tomorrow, with massive volume and see this thing toy above 80. Then I'll be taking more of a substantial position short because I have a tighter stop, okay, and I think this thing would get even more exhausted. People can read these charts as well and see that this thing is overextended up here now into a resistance area after getting crushed. And if you look at the percentage retracement here, you're close in 40%, 50%, which from a fib level could be a nice resistance point. Flat 200, but that's still, what, $20 away. So there's a lot of things here working. It may not materialize Monday, but RCL is one that I'm watching as a short opportunity to get on here. And if you were long in this, I would consider taking some profits off this move. It's been a really nice move. And you'll see the airlines too. Let's take a look at American Airlines. Had more of a negative day. It gapped up large, and then it came down. Ultimately, it tailed out. You see it initially moved up strong and then turned right around and then worked its way down here on the 15-minute chart throughout the day. Here's the 60-minute chart. So it's less likely, but again, if it Monday gaps up to back near these highs, $22, $23 a share, you better believe I'm looking to get short on this thing. Okay, but I have a stop, and I'll have a tighter stop that I'm going to allow. You notice the declining 200-period moving average that it kissed off of here on the daily chart, and the declining 40, and within this area between the 20-period and 40-period declining moving averages here. After this failed breakdown, which is an extended breakdown, which is actually something I usually try to play long. Things are extended way up and they break out, I short it. Things are extended way down and they break down, I get long if they can't follow through. And you can get a nice profit like this when you see that. You can see here was where on the daily chart tried to break down, turn around, no volume, and then just kind of wandered up, and then all of a sudden, boom, boom. And that really puts the nail in the coffin in a lot of shorts. The losses are too big. They take their stops, and they're typically out at this point. Some that have bigger pockets that don't get margin calls can start doubling down. And that's why I say I'd love to see one more time. One more push higher here will really get me happy. If it only gaps up to 20 or say it opens flat, I may just day trade this short. But right now, from a swing trading perspective, if it opens up in that area, too big of a stop to me, not worth it. But day trading, absolutely. But even better if it gaps up. So that's what I'm watching for this one. And you can look at a few others. They're all about the same. Delta, right? Same thing, gap up, close down, or close down from the open. Let's look at Love. Same deal, right? Less strong. Save. Same thing. And Alaska Airlines. Same thing. United, I guess, is the other big one we need to look at here. Same thing. We're pretty much opened on its high and then came down pretty much. Didn't quite fill the gap. So, again, these are ones, if you're a day trader, watch them for short opportunities. If you're a swing trader, I think with gap up and with one more push toward those highs that we put in on Friday, I'd be definitely more apt to jump in short on these things. Um, but that needs to happen first before I'm holding money overnight on these things at this point, because there is still a lot of room. They came down so smoothly that there's so much more room for them to come back up, and you can get some more push to the upside here before they come back down, if they come back down. Here's another one I'm watching short. Again, you got more of a volume spike here off this island gap up, right? Taking out pivots here. Anyone short really has no reason if they follow their stops to get out. Declining moving average of 20 on the weekly chart. Pretty decent percentage retracement off the lows. At this point, you should be eyeing it up as a short idea, at least I am, and looking for a setup for that 3N. N. Fedex, this is another one I like as a short idea. You can see the 20 period on the weekly chart, the 40 period, it just came above it. Big candle. Volume was bigger here on Friday. You'll notice a gap up. You'll notice the topping tail right here at the 200 period moving average. You've got a resistance point here that it actually breached and came back down. I like this as a short opportunity. Day trade and swing trade with a setup. It's not quite as climactic here. I'd love to see a bigger volume push for it to be climactic, because right now, if you got short, immediately if it opens up flat around 142 on Monday, your stops at the top of the topping tail. I think there's some risk there. Again, depends on the market. If the market is strong in general and this one opens flat, you could probably do it better or take a shot. But if the market's strong and this one's strong, or the market's weak and this one's strong relatively, you may want to just watch. So again, I don't look myself, a lot of these swing trade ideas short. I don't see myself jumping in on Monday right off the bat. Unless we see a certain thing happen with the markets and everything in general. But right now, as of what I've last checked, things are looking like they're going to be pretty flat at this point, but we'll see. Boeing also here, pretty textbook. 1, 2, 3, 4, 5 days up, volume increasing, capitulating here more on a doji type wide range day. To the declining 20 on the weekly chart. You'll see it came down so seamlessly. There's really no resistance levels because it came down so quickly. I mean, you got a 2-day cluster here just above about 220 to 240. I like this as a short idea, if not just as a day trade. As a swing trade, you're looking wide range here again. So swing trade, I have a little bit more stringent requirements with regards to what has to happen. And it may not be Monday, maybe Tuesday, Wednesday, Thursday, but I'll be watching it. So I'm just laying these out here for you. These are what I'm watching to trade in the next week. I mean, there's other things I'm watching. I don't have time to go through everything, but I'm showing you some of the high hitters here so you can see the approach. But there's certain things that have to happen. Don't go blindly into just buying or shorting or selling or buying options on things just because you see it on a video somewhere. You got to have a plan. And I'm going to do a more robust video for my channel here talking about what is required for success. I've been doing this now for 16 years. Day trading and swing trading for more like 22 years. And I know it works. And I know that, honestly, 90% of it is psychology. It's your mindset and what you bring to the table. And I'm not going to get into that right now, but I'm going to do a video on that because I know a lot of people are wanting to find out more. And there's a lot of people out there selling things. And a lot of times, there's definitely some good stuff out there. There's also some stuff that's not very useful. And people are actually getting misdirected with regards to what the important things are, in my opinion, with regards to this trading game and making money consistently, month over month, year over year, and including increasing your profitability as you go forward, realizing it's an ebb and flow. You will go through periods where it's not always every month an increase and increase and increase. At least that hasn't been my experience. It's an ebb and flow. It's really the Pareto principle. It's 80-20 rule. You'll make 80% of your money on 20% of your days, and you'll make 20% of your money on 80% of your days. Okay, so you really got to have faith and focus on your plan and stick to your plan in order to make things work. So Boeing is one I'm going to show you here. I think this is one to watch for a short opportunity. The other one is, let's see, it's Kim. Another one, multiple days up here, topping tail. Volume, though, not quite as big. I would prefer this type of volume here. Okay, and I think a lot of people here that this was a lot of shares changing hands here as things looked like they wanted to go lower. And then, of course, with this move up here, anyone short is getting stopped out. Anyone long is thinking, man, maybe I should take some profits. Not anyone. But a lot of folks, I know I would be if I was long on this thing after getting crushed like this. It's back up here in between these declining moving averages. You got a flat 200 about $2 away. You got a little cluster resistance here around 16, but not much. Topping tail, red bar, slightly higher volume. I think this has got more downside bent to it. Now, where would it be? Where would your target be? Say, for example, you got short on this. And again, I'm not. I want to see what happens on Monday, but I'm watching it. This is on my list of ideas to get short on. But let's say, for example, conditions look good and I got short at $15 a share and I put my stop at $16 a share. It's a $1 risk. Where's your target going to be? Well, the first target would be this 13 area because you can see the minor support here in this area. So it's got to come down to there. I would probably be taking partial profits there and then looking for another move down to the 11 to 12 area for the balance. Just to give you an idea of what my approach would be if and when I got in on this thing, assuming it would be 15, 16. It may not be. This thing may go higher. And again, I'm looking to then just day trade it short if I get opportunities like this where it double tops on the 15-minute chart, grinds down, and tests the low. Okay? All right, guys. Hope you found this video useful. I'm going to be coming at you with more videos here. Try to do a bi-weekly video going forward to help people out. And then also put a breakdown of what I feel like are the most critical things for people to become profitable. If you're watching this and you're toward the end of this video and you haven't yet, go check out my free video series, the technical TA series, course series. It kind of breaks down all the technical aspects from patterns to approach to psychology at a very high level. Start there, and of course, hit me up, Tom@TomWillardTrading.com if you have any questions. Have a great week, and I'll talk to you next time.